and cables business across various geographies. This is a big positive, the stock, and a pretty large order size. So you will see KEC react positively to that news flow. Well, Zydus Life, we will try and connect with the management on this. They have gone out and acquired 50% stake in Sterling Biotech from Perfect Day. Acquiring a stake in Sterling Biotech has been done largely to enter the fermentation-based protein business. We'd love to understand the size of the deal and, of course, the size of this business because this is a significant stride made by Zydus in order to acquire market share in the fermentation-based protein business. Well, you've also got Zen Technologies. They launched a QIP last week. It was successful. In fact, it got lapped up, to say the least. The stock went home with gains of 2%, and Zen Tech has successfully completed a QIP to the tune of 1,000 crores. Management has time and again indicated that they're looking at inorganic growth, so acquisitions is largely why they've gone out and raised that money. We will talk to Ashok Vatluri at some stage to get a better perspective of what specifically Zen Tech is going to go out and buy, Tamanna.
Yeah. So Zen Tech positive. I would say Coal India, not so much. So obviously, we've had a whole set of assessments of what happens with the royalty mining tax that now companies have to pay. A recent Supreme Court order made sure that these are paid and with retrospective effect. There will be, legal proceedings trying to soften that blow. But as of now, it's becoming very clear that at least for Coal India, that impact may touch 35,000 crore rupees. This was a quote from an official, a government official on PTI this weekend. That could be seen as a negative for Coal India. Nuvama has a note out as well. They've maintained a hold with a target of 567 on the stock, but they also go on to say that that they expect lower volumes in FY25 and 26 when you compare with management guidance. This could have an EBITDA impact as well. So Coal India in a bit of, sticky space right now because of that mining tax. That would be a bit of a negative. Lemon Tree is the other one. Lemon Tree has signed a license pack for 175 room property in Surat. Under the Aurika Hotel and Resort brand. Remember, in terms of the quarterly numbers, Lemon Tree was a bit of a disappointment for the street, but this might be seen as a positive for the stock. And let's take a look at Alembic Pharma. Alembic Pharma has news that could be seen as positive for the street. They have got a FDA approval, a US FDA approval for an ANDA, that's an abbreviated new drug application for a certain product. I'm going to try and say it. Betamethasone valeriate foam. I think I didn't do too badly. It's essentially used for scalp problems. I don't know if it's some version of a dandruff shampoo, but yeah. Alembic Pharma will definitely see a bit of an upside. A couple of more?
Yeah, just a few more. And TCI is what I want to quickly mention. They've announced a buyback, and a pretty significant one, to the tune of 1.72% at 1,200 rupees a piece, where the promoters are looking to pick up some of the equity in the market. The stock will be one to watch out for. It's at a premium to Friday's close. So that's a good thing and a good sign for existing investors. A couple of updates. You remember we talked about that massive block deal on Friday on Ambuja Cement, where Holden Investment was selling 2.75% stake. This got lapped up by none other than GQ Partners, SBI Life Insurance, and the NPS Trust. So very, very significant hands have come in and picked up the stake that Holden, which is the holding company of Ambuja Cement, brought to the market. So the supply was picked up by solid hands. Nika as well, where you had a stake sale to the tune of 1.5%. This was picked up by Goldman Sachs, Singapore, Kotak Mutual Fund, and Nippon Mutual Fund as well bought into it. Just a quick highlight, because it's such an active and busy time for primary markets. All eyes on a listing today at 10 a.m., and that's Inter-Arc Building Products. Remember, the company will be listing at 10 a.m. The grey market premium indicates to a 40% premium at listing time. This was a 600 crore IPO, which was subscribed over 93 times. So euphoric, excited. The broader market sentiment is positive. The response to this one will be nothing less than magnificent this morning.
Yeah. IPO's another exciting space to watch. Just one more stock I'll add is Uno Minda. So their joint venture, Tokai Rika Minda, has announced the opening of a new manufacturing plant in Nimrana, Rajasthan. They'll have an annual production capacity of 3.84 lakh unit per month. The reason I'm mentioning this is because I think if there was one clear theme, at least on Friday's trade, it was the auto pack and auto anks. So that's definitely one to watch out for. But the other big story, of course, are all the changes to the indices. The NSE has announced significant changes to its benchmark Nifty 50 index. Bharat Electronics and Trent are set to join the elite Nifty 50 list, replacing Divi's and LTI Mindtree by September 30th. Agam joins in with all the details. Yes, Agam.
Right. Well, as you put it, I guess those are the most important changes, considering they belong to the benchmark index at the moment. So the Nifty 50 will see changes with effect from the 30th of September, and you will have exclusions, which will include something like a Divi's Laboratories, along with LTI Mindtree, and both these counters will be replaced by Bharat Electronics and Trent. Remember that Bharat Electronics and Trent have had a tremendous last 12 months. They have, in fact, gone from strength to strength, and and they've been steady movers. We haven't seen sharp reactions, sharp up moves and sharp declines. There's not been as much volatility. Even besides that, well, when it comes to several of your market capitalization parameters, well, they fall in place in order to be a part of the Nifty 50 index. Well, moving in, we also have a change as far as the Bank Nifty index is concerned. That is where Bandhan Bank will be replaced by Canara Bank. Again, Canara Bank has been one of those PSUs which has seen a substantial amount of, an improvement, not only in its operating and fundamental metrics, but also technically we have seen move from strength to strength as far as its price action is concerned. But, to very quickly touch upon some changes with respect to the FTSE all world index, that is where we have 13 additions as well, and some of the prominent names again stand out, quite a few in fact which have actually done quite well, and as you can see on your screen there, among some of them would include something like a Bharat Dynamics, Central Bank of India, Cochin Shipyard. Among others, you also have GET&D, Hitachi Energy, as well as RB Infrastructure, along with KEI Industries. These are just some of the names which have been included among the 13 which become a part of the FTSE All-World Index.
Thanks, Agam, for that. Well, of course, some of it may have already priced in, because remember, Nuvama puts out a report usually a month ahead of the anticipated changes on the exchange, and that's when you usually see the buying emerging in those stocks. But this has now been announced, and it's a filing, so you will see counters sentimentally reacting to this news flow. A quick word on those Anil Ambani-led companies. Remember, they sold off substantially on Friday. Reliance Power was down 5%, Reliance Infra was down over 10%, and Reliance Home Finance as well saw a cut of 5% on back of Anil Ambani being barred from the exchanges. This news could trickle into today. This, of course, could trickle into today as well, and some of these counters may continue to hit lower circuit in trade.
They put out a notification over the weekend, a statement from Anil Ambani as well as both those companies which had hit lower circuits on Friday, saying that Anil Ambani is not on their board. And this whole situation has nothing to do with their group companies. It's Reliance Home Finance. But having said that, it's a huge order.
Yeah, and even if that statement has gone out sentimentally, I think most people, when they think of Reliance Power, Reliance Infra, or even Reliance Home Finance, you do think Anil Ambani.
Yeah, of course.
So it doesn't do too well for these counters. Reliance Home Finance, for a given, will see selling pressure today. But let's quickly take you through what else is happening. In fact, in light of the launch of his new book, What Went Wrong with Capitalism, Richard Sharma spoke to market veteran Ramesh Tamanna in an NDTV Profit exclusive. Listen in as he explains why the United States is slowly moving away from its capitalist roots. He also explains why strong domestic investing endeavor may aid India going forward.
I'm a complete firm believer in capitalism, but for me, the definition of capitalism and what capitalism is today has been severely distorted. I still feel America is a great place to be. It's a place, like that. There's a little slogan in the book, in fact, which I use, which I had seen, in fact, somewhere using it like on a placard, which is that someone was protesting against American occupation.
Yankee, go home, but take me with you.
But take me with you. So it's still a great place to be. But I, at heart, have prospered as well from capitalist system, and there's a lot of good that America has to offer. But when the beacon of capitalism, the so-called land of the free, today has become a place where capitalism has been or is increasingly distorted. And you feel so many young Americans are saying they would rather have socialism than capitalism. I wanted to write a book to examine what's happened. Why have they lost faith in the current economic system, and possibly what can be done about it? And then what are the lessons for people like us in India? Because at the end of the day, we are still moving in a capitalist direction, but we are still far away from being a truly capitalist country.
First, do you feel that why should Indians pay attention to the Fed and the interest rate? As you speak, Jackson Hole is going to happen. Is it important for emerging markets to see what the Fed is doing?
Absolutely, because I think that as far as emerging markets are concerned, that they're still very reliant on foreign capital, for their economic growth.
FDIs.
Now, like FDI, and like also for FII flows and stuff. Now, because the Fed is still the central bank of the world, the de facto central bank of the world, it still controls the price of money. It still has a lot of influence on that. Now, in India's case, the good thing which has happened is that a very strong domestic market has emerged for flows. But most emerging markets don't have a strong domestic market. So they are still very reliant on foreign capital to drive their stock market, to drive a lot of their economic growth. India has been able to set in motion the financialization process where it's less reliant on foreign capital. But many of the other emerging markets aren't so fortunate. So therefore, they care about it. So the Fed remains the central bank of the world. And the second aspect, I think, is the fact that many emerging markets don't have a strong enough domestic market to support both economic growth or equity market returns in the absence of foreign flows.
And remember, you can watch that entire conversation on NDTV Profit and, in fact, across the NDTV network all day today. All of those timings will be on your screen very, very quickly. But, Samina, what a great opportunity to be in a room with these two and actually have that conversation off camera before they shot.
Yeah.
And yeah, their outlook was very, very interesting to see. I think the resilience of the Indian markets and how that has changed came across as a concurrent theme, didn't it?
Indeed, and I think one very important takeaway for all our viewers and young investors, I mean, Ramesh Damani said this, right? He did say that if you're looking to create long-term significant wealth, do not sell stocks. What you want to do is buy and hold. The longer you hold, the better your returns will be. He, of course, has and been quite constructive on the PSU space, a sector that he indicated hadn't done well for so many decades together. But, of course, he managed to, that space managed to do quite well for his portfolio at large. He also talked about how, rather than looking at individual stock performances, what an investor should be doing is to look at the broader portfolio performance, because there'll always be times when some stocks and some sectors are doing well, and sector rotation largely is the only theme in the markets. But we also did ask him if he was excited about all the primary market action, and he seemed to be clearly biased towards the secondary markets. But talking about primary markets, Interarc Building Products that will be listing on the exchanges today, the grey market premium is indicating to a 30 to 40% upside on listing. Varsha is standing by with the listings that are lined up today and the IPOs that open up for subscription as well. Varsha, over to you.
Thanks, Samina, for that. So yes, as you rightly said, the 600 crore IPO of Interarc Building Products will make its debut on stock market today. IPO was subscribed 93 times on its final day, where the bids were led by institutional investors at around 205 times, followed by non-institutional investors and retail investors. We do have update on Orient Technologies, wherein the issue was subscribed 151 times on the day 3, and bids were led by non-institutional investors at around 300 times, followed by qualified institutional investors at around 189 times and retail investors at 66 times. We do have upcoming IPO of Premier Energies, wherein they're going to raise up 2,830 crore through an IPO, which will open on August 27. IPO consists of fresh issue of around 1,200 crores and offer for sale of rupees 1,500 crores. Price band is set at rupees 427 to 450 per share, and issue will close on August 29. Market cap at upper price band stands at around 20,200 crore. If you see why they are raising funds, so they want to invest in the subsidiary Premier Energies Global Environment Private Limited for part financing of the establishment of 4 gigawatt solar PV manufacturing facility, which is going to be in Hyderabad, and also part of the money will be used for general corporate purpose. Now they plan to send up around 968 crore for the investment in its subsidiary, and around 484 crore will be deployed in the current financial year, while 484 will be deployed in the next financial year.
Exciting times ahead. Remember, the primary markets have seen so much more action over the last couple of months, and 2024 is supposed to be a year that belongs to private equity markets. Interact is expected to list, and Orient Technologies will also list in a few days from now. That too is indicating and expecting to see a 40% upside in trade. But Tamanna, I think the implied Nifty is indicating to a gap up this morning. We're only 1% away from our record high. So it's small strides. I know we've been talking about how it's been quiet, but the fact remains we're almost at record highs as we see it. And there's a good chance that Reliance may provide the leadership or sector rotation, stock rotation, if you may want to call it, over the next few days, largely because they've also got their AGM on the 24th, which is Thursday. But apart from that, I think global cues are positive, implied Nifty indicating to 61 point uptick.
So just on that point, if you look at the small cap index last week, week on week, it was up 3%. So yeah, slow and steady definitely wins the race, and IPOs will keep fueling it as well. But let's take a look at what's happening in the F&O space and what your setup needs to be there. Agam is joining us for more on that. Yes, Agam?
Well, in general, Friday was a good day of trade because nothing happened. And the reason why that's positive is because we held on to 24,800, and we're not too far away from that new life high, as Samina just mentioned a few moments ago. And perhaps there is a little bit of anticipation that given we have positive global cues, could today be the day, or perhaps could this week be that week where we in fact move in and make new life highs. So as far as your Nifty 50 is concerned, we saw about 3.5% increase in open interest, even though the index itself was flat. And of course, in terms of the Bank Nifty, we saw flattish movements here, but about 8% decline in open interest as well. Moving in, and as far as the option markets go, again, watching out for 24,800 because that's where we saw the Nifty consolidate, on and over the past 2 to 3 sessions. On the higher end, just look at the concentration of the 25,000 call. Now, should we see the Nifty move above that, and 25,000 will be a little bit of a resistance, but should we see that, we'll start seeing unwinding of these calls, and that could perhaps exacerbate the buying a little bit longer, which actually throws in a higher probability of the Nifty making a new life high based on that. Of course, on the lower end, we're continuing to see a lot of build-up with respect to puts between 24,500 thereon to 24,800s and higher. In terms of stocks, it was a mixed day of trade, but all in all, we did see longs in Bajaj Auto, ICICI Lombard, and Sun Pharma. Among stocks that saw unwinding, let's pull that list up as well. We saw a lot of long unwindings for Atul, Exide, India Mart, and United Spirits. But with all the information that we have, how do we go about markets? Well, we have Milan Vaishnav of Gemstone Equity who's joining us on the show. Milan, good morning. Thank you so much for joining in. How are you going about markets at the moment?
Very good morning, Agam. Markets are, yes, they are still continuing to show a mixed picture from a technical standpoint, because I'm seeing two things happening. First is that the supports for the Nifty have been dragged higher from 24,000 to 24,500 levels, because we are seeing the highest put-wide concentration at that point. But at the same point in time, I'm also observing that the highest call away, it continues to remain stuck at 25,000 levels, and even going by the both the weekly as well as the daily charts, I'm still seeing resistance in the zone of 25,000 to 25,100. So there are two things I'm seeing so far as this week is concerned, because we are into the expiry week of the current month series. I see that Nifty might test 25,000. That's not a big thing, but the important point is that there are little chances of it showing a convincing trending breakout about 25,000 too soon. So I expect the markets to continue to remain in this broad trading range. I also expect 25,000 to stay put as one of the major resistance level for the Nifty, especially so far as this week is concerned.
All right, and you're playing a strangle then in Milan?
Yes, I continue to play the straddle. The only thing is that I won't be going through the next week. I skip. I choose to stay for this week. I would be selling 25,200 call and 24,500 put both for this month expiry, 29th August. By doing this, we would get a premium of around 51.5 maximum. That would be around 1.8%. Yield that we can expect, and as a part of risk management, we will exit this position if we see Nifty moving past 25,200 or ending up violating 24,500 on the charts.
Okay. And I believe you also have a bull call spread coming through. Milan, can you take us through that one?
Yes, I have a long call on Bharti Airtel. Bharti Airtel is in a secular sustained uptrend, and over the past 1 or 2 weeks, it's been under consolidation, but I'm seeing a very strong bullish divergence on the on-balance volume, which shows a strong accumulation while the stock was consolidating. So I'm going for a bull call spread for Bharti Airtel. I would be buying 1,500 call for September and selling 1,600 call for September. I'll be paying a net premium of around 34.15. Maximum profit that we can expect is 31,279, and maximum loss that we can ever suffer here is 16,221. However, even to keep this maximum loss figure limited, I would suggest exercising a protective stop loss at 1440.
All right, there you have it. That's Bharti Airtel, a positive view coming in from Milan. Milan, thank you so much for joining us and taking us through your views on the markets. With that, it's back to you.
Thank you, Agam, for that. That's the view coming in the markets and on Bharti as well. Well, it's time now to keep the focus on market technicals and today's trade. Soni Patnaik, AVP of GM Financial Services, and Kush Bora join in. Soni, I'll start with you. We're in about 1% away from our record highs. Global cues are positive, but I guess higher crude prices and some of the geopolitical stress may put the tap on the upside. Do you feel like at current levels, the Nifty still remains a good buy for a new record over the next few days?
Hi, good morning, Samina, everyone, and thank you for having me on the show. I think on Friday we've seen a very strong close for Nifty above 24,800. The put call ratio of the strike of 24,800 remains comfortably above 0.95, which is indicating that the put writers have a clear dominance over the call writers. So from current levels, we can see that if we are opening above the resistance of 24,850 or so levels, plus minus 20 points we can take as a leverage, there's a possibility that we can retest the previous all-time highs around 25,000 odd levels. The option chain is indicating that there's a very good support building from 24,600 to 24,800. There are multiple support. It's a good base to start with, and Nifty can head for new all-time highs in the coming days. There's a chance that Nifty can actually even test 25,200 to 25,400, somewhere in that range. So it's quite a possibility for Nifty to see those levels, keep a buy at current levels as well. But for any buy at current levels, one must place a very strict stop loss of 24,700 on closing basis. However, if we have to compare all the three indices, that is Nifty, Bank Nifty and Fin Nifty, there's a clear strength which can be seen in Fin Nifty at current levels in comparison to how Bank Nifty and Nifty had fed. So Bank Nifty, we feel that 51,100 is still holding as a very strong resistance. It needs to cross that level. It needs to sustain above that resistance to see any further upside. Whereas in that comparison, Fin Nifty has given a very clear breakout. So there's a possibility that Fin Nifty can reach the levels of 23,500 as a target before Nifty and Bank Nifty hit the target. So I think of all the three indices, the best buy would be in Fin Nifty in comparison to Nifty and Bank Nifty for now.
So, 25,000, when and how we get there and at what speed is the big theme for the day. So is perhaps a recovery in the Bank Nifty. Kush Bora also with us in the studios now. Kush, you would agree?
First up, morning, ladies. I'm not going to do the faux pas again.
I would take offense to just being clubbed in as ladies. There's no winning this.
Then on that note, good morning, Samina. Good morning, Tamanna. I think I'm a little more constructive, a little more bullish here. I know there is this hangover of the Middle East war.
Yeah.
But I think the kind of setup that we are in, any kind of dip that comes about because of that will actually be a buying opportunity. That's the kind of strength and the resilience the Indian markets have shown. I mean, we've seen what's happened in Russia and, one more war in Middle East prior to this, but the markets have done their own thing. So I remain constructive. a little surprisingly even perhaps.
Just on the Middle East, if I can just come in, the reason why it's not such a worry right now is because look at the statements from both sides. Israel Katz, who's a minister in the Israeli government, has said we don't want to expand this, we are done with this one exchange, and the Hezbollah leaders have also said that we are done, we don't want to expand this for now. So, there's no signaling that this is an ongoing thing, at least for now.
True, and also that's why if you see, I think the global or at least the Asian markets are mixed. There isn't a one tone of red. If I'm not mistaken, Hang Seng was in the green about 1% higher, while some of the others were a little lower. So that's why I think the tone is a little mixed, and that's why for me, and as I was saying, surprisingly, the more important factor is a more local, a more domestic one, which is the monthly expiry. If you see the call options around 25,000 have a significant position on the Nifty, 51,000 and 51,500 have a significant position on call options have a significant position on the bank Nifty. These might perhaps weigh, but if we move closer to 25,000, let's say today or tomorrow, I think there'll be some jitters in the bear camp, right? And that's why I'm not as bearish at the moment. I'm a little more constructive. If at all, I think it's this hangover that is going to play out. Other than that, I think a little more constructive. Friday, we spoke of creating long positions on the Nifty, on the bank Nifty, both. That view continues. If you've got one, continue to hold. What do we do today? Just given that the kind of slightly mixed scenarios that we're looking at from the global perspective and the handover from the global markets, we'll perhaps just wait and see what kind of trend is, whether we open up and then consolidate or whether we move higher from there. I'll probably give market the initial 30 minutes or an hour to see how it goes from there. But on the whole, constructive, hold your long positions.
One thing that may not, you can look at the glass as half full or half empty, but the VIX actually spiked quite sharply on Friday. This is after many days of doing okay on the VIX. We saw a big jump coming in the VIX index. It was up nearly 5%. Now, of course, under 15, it's comfort for bulls. Over 15 is when the bears seem to be in control. So even though there was a spike, it still remains under levels of 15. Sony, I want a quick view on Bank Nifty. It's been oscillating between gains and losses for pretty much all of August. Does it still remain a buy on dips strategy? How do you play Bank Nifty?
I think for Bank Nifty, it won't be a buy on dips for me. I would wait until the resistances are taken out. So I wanted a close on a weekly close above 51,000. It was just around that corner, but not a very decisive, strong close above that mark either. So there's a conditional buy in Bank Nifty. Only if it's able to cross a 51,200 in spot levels for today, we can say that Bank Nifty can be bought from those levels. The targets can become 51,500, 51,600, perhaps maybe for a day or two. That's the maximum trading days that we can see in Bank Nifty. One can place the stop loss of 50,800 from those levels. But a buy on dip may be a bit difficult because if it's not able to cross the level of 51,000, if it's not able to cross that resistance, the buy on dips will not make sense because the resistance is getting tested. It's not getting broken. Rather, the support gets tested and that can get broken. So I think it's a bit dicey for Bank Nifty. Let's wait for the resistance levels to cross to enter a buy strategy.
Chakri also joining us this morning. Very good morning, Chakri, and great to speak with you at the start of a fresh week. With, I think, the global Q stacked up fairly positively. What would be the sectors you're looking at this morning?
Good morning. Thanks for having me. I think, with the handover from the Fed, it's clearly the easy trade is, of course, IT, information technology. Normally, you would have also said metals, but given the mining tax and the confusion related to that, we'll stay away from metals. And infrastructure is beginning to pick up EPC companies. Because they've had some margin hits in the past. So companies like PNR Construction, KNRC, Ashoka Buildcon, these are some of the companies to look at.
That's the word coming in some of those companies in today's day of trade. Chakri, you've also got an expectation that IT stocks may continue to see some buying after taking a pause over the last few days. Tactically, between now and 17th, 18th of September, would you buy tech stocks? Is it an opportunity to invest in any of them for the next 2 weeks?
Yes, I would clearly buy IT stocks because now the debate is a question of whether it's going to be a 50 basis point cut or a 25 basis point cut. That's a very different conversation from no cut about a couple of weeks ago. So incrementally, any cut is positive for the IT, and these stocks have kind of not really performed, and their orders have been stalled. I think we'll see some amount of their orders start coming back, at least news flow of the orders beginning to ease up. This will happen post September 18th. In anticipation of that, I think clearly we could start buying, all the front line and the mid cap names.
Be a little more specific, you can, Chakri, because I know one way of doing this is to buy the IT ETF, but that has 4 stocks. Any specific names in the IT pack that are constructive on?
I think it's still, HCLT looks good in the front line. Emphasis Persistent looks good in the mid caps. All of them have enough business momentum on their side. And they have a big financial services exposure as clients. These are usually the first companies who start giving out orders when interest rate starts going down. So they are HCLT, Emphasis, and Persistent.
Okay, let's get our picks this morning. Let me start with Sony. Sony, very good morning to you. What would be on your radar this morning for the day's trade?
And good morning, Tamanna. So first would be from the financial space, because I'm a bit bullish in the Nifty index as well. So the pick comes in for SBI Card. So SBI Card, we've seen a good option chain breakout above 705 levels. So I think that's a good support that it has formed. We've also seen call open interest unwinding as of week-on-week basis for higher strike prices. So SBI Card can be a buy at current levels around 718, 715, keeping a stop loss of 700, or target of 740, 750 levels can be seen. The second pick would be from the IT space, because as after Nifty, I was bullish for Nifty. So I think IT is one sector to look out for. It has seen good long built-up positions week on week basis. So the pick comes in here for Birlasoft, which has seen a significant correction. Now the stock is reversing from its lows, taking a good support from 580, 585 odd levels. It's a good support that it has just taken out, and it's closed above 605. So that's a good breakout in option chain as well. So Birlasoft keeping very small stop loss of 598. One can see higher targets of 625, 630.
Kush, what about you? What would be your big picks this morning? And just to add to that, anything from the auto pack, which has completely been buzzing towards the end of the week?
Incidentally, one of the picks is from that space, ancillary though. Let me start with that, why not? Shriram Pistons, this stock has been consolidating for a while, but for the last 8-10 sessions, if you see, we've seen a very good run on this one. Friday saw a bit of a profit booking, but then despite that, a positive close. I think Shriram Pistons is something you can hold in your portfolio for a long term as well, but from a near-term trading perspective, you're looking at 2200, 2300 as your targets, and 2000 being your stop loss. The second pick slightly, seems defensive, but this space has been doing well. So Apollo Hospitals makes the cut. There has been a very good run in this stock. It's given a breakout above the 6800 mark. So you're looking at 7000, 7150 as your targets, and 6750 as the stop loss.
Yeah, and Apollo Hospitals has managed to do well in the earnings reporting as well. So lots of triggers, not just technically strong on the charts, but fundamentally it was a good quarter for the company. Well, the stock did go home with gains on Friday. Further upside cannot be ruled out. We'll try and get a technical view from all those inclusions on the index and the FTSE half-yearly change as well, to see where some of these counters will move. But before we go into that, some of those pharma names will be in focus. So Zydus, on top of the list, has gone on and made a pretty significant acquisition. Along with that, a few more that we are tracking this morning. Varsha has got more details on that. Varsha, the top 3 pharma names to track this morning?
Well, thanks, Samina, for that. So let's start with Zydus Life Sciences, wherein they're going to acquire 50% stake in Sterling Biotech from Perfect Day. Now, this business. Now, the acquisition is to enter into fermentation-based protein business. Now, they're going to acquire this 50% stake from Perfect Day, which actually acquired stake while the Sterling Biotech was under bankruptcy. Now, current turnover, if you see, for Sterling Biotech stands at around 456 crore, while Zydus will acquire 50% stake at 550 crore. Which is at 2.4 price to sales. Then we have Dr. Reddy's, wherein US FDA completes product-specific pre-approval inspection for manufacturing facility in Andhra Pradesh, and US FDA has issued Form 83 with 3 observations. Then we have Alembic Pharma, wherein they've got US FDA approval for a product which is used to treat scalp problems, and Alembic with this has a cumulative total of around 213 ANDAs approval. Now note, the product that they've got approval has the estimated growth is around 4.3% from FY22 to 2030. Then we have Ekam Drugs, wherein they've appointed Mr. Amrut Medkar as Chief Executive Officer for their CDMO business with effect from August 24. Also, they did come out with their investor presentation wherein they want to set up greenfield manufacturing unit in Jammu and Kashmir, and 2 manufacturing units will set up. One will be for a multi-dosage facility focusing on pharmaceutical, and other dedicated unit to nutraceutical. And also, there's a proposal to invest around 265 crores for both the facilities, which will be funded via bank loans as well as internal accruals.
Okay, so definitely some of these pharma in focus. Pharma actually has been a broader theme as well for the last several weeks. Just want to get your view, Chakri, on some of the pharma names that we've discussed today. Zydus, Akums, a lot of excitement about their numbers as well. Anything that you like from this pack?
I think Zydus looks okay, MCure looks okay. The valuations are still on their side. There is enough amount of business momentum based on the new NDAs that they have got. And also clearly, I think one earnings upgrade that we're likely to see is because of, as and when the US interest rates start again cut, this is another sector which benefits from a pickup in momentum in the US.
Well, those are a few of the pharma names that we want to track. Like I said, after this break, we'll put the focus on index changes and how do those stocks look on the charts. 70-point uptake is what's expected in early minutes of trade. We'll take a break. We'll come back. We'll also tell you about the latest development on the Anil Ambani Group companies.
Welcome back. All right, we are just a couple of minutes from the pre-open, but before we get to that, the live rates coming in on the pre-open session, a very big story which broke on Friday, and more details now over the weekend as well, is that SEBI has imposed a fine on businessman Anil Ambani and banned him from capital markets for 5 years in an alleged funds diversion case. Ambani said that he's reviewing the SEBI order, but the question is, how and where did the 8,800 crores that the SEBI order says was misappropriated go? What next for Anil Ambani? Sajid joins in with more on the story. Yes, Sajid.
That's right. The market regulator has come out with a detailed order which is spanning over 222 pages, and as a result of which, it has done a detailed investigation into how the funds have moved through from Reliance Home Finance to various entities. The big question that comes to mind is where and how did the money go, and what did SEBI find? The first thing is that many of the approvals happened all in a day. Loans were disbursed on fast track. There was due processes which were not followed. No field investigation was done before giving out any of the loans. No creation of security was done against those loans because these were given under the garb of working capital. There was no customer rating and no escrow account which was created there. In fact, there was no documentation which was undertaken by the company or its officials when it gave out those loans. The second big question that comes in is that where did this 8,884 crores go? The first thing is that it was first transferred to 43 entities which were directly or indirectly related to the Reliance Anil Ambani group, of which the 43 entities got nearly 8,847 crores, and this was transferred to 19 entities of the group. And of these 19 entities, 14 entities had nexus with the promoter group there. Reliance Capital, got nearly 2,359 crores, followed by Reliance Commercial, which was 2,278 crores. Reliance Infra, which is a listed company and which saw some correction on Friday, got nearly 1,559 crores. Reliance Home Finance, ultimately received some 1,500 crores back. There were some other companies like Reliance Big Entertainment, Broadcast, which got over 200 crores each. The other thing which needs to be seen is how were the funds used. If you look at the total investigation report based on the forensic audit which was released by the market regulator, nearly 3,573 crores were used by group or related entities to repay loans. Nearly 1,338 crores were used to pay banks. 2,238 crores were used to pay NBFCs and other third parties which the group companies owed money to, and nearly 1,600 crores was a potential circular transaction which was routed back to Reliance Home Finance Bank. There were 819 crores which were put in FDs and mutual funds. The market regulator and the forensic auditors were not able to figure out how 1,934 crores where did it go, or where did it finally end up in. So it's 8,800 crores which went to various entities in the year FY 18 and 19, and this investigation shows that a lot of money got siphoned off, the regulator says that the mastermind behind this scheme was the chairman of Anil Ambani Group, which is Anil Ambani.
Sajid. All right, first pre-open rates are in, and it seems like, at least in the first 1 minute, it's all about IT. TechM, Wipro, Infi, TCS, all dominating, the Nifty chart at least, and doing well. Tata Consumer also up there. RIL and BPCL too showing an upswing, as is Adani. And I want to see what Ambuja is doing after the GQG investment details are out. So those group stocks also doing fairly okay. Let me just go across to Chakri for a first view now that we have the pre-open rates up as well. Chakri, you briefly talked about IT, but let me get your view also on auto. Again, seems like it could be a pretty good day for a Hero Moto as well. Is there anything you're liking here or constructive here? M&M also doing fairly okay in open trade.
TVS Motors is a company which continues to gain market share in both EV as well as continue to maintain a share as well as in the regular ICE business. Bajaj Auto has increased its EV market share quite dramatically over the last few quarters. The entire auto pack benefits from an interest rates cuts because EMIs become cheaper when for people to go out and buy bikes and cars, and so for autos clearly now have a macro level push, and so I think TVS Motors, Bajaj Auto, and are the two picks.
Right. You've got all those tech names, as we had pointed out this morning, doing well. Metals also, by that logic, should be seeing some buying and trade. Not sure that's how it's playing out, but metals, another space on back of a weaker dollar, are and should be doing well, and they are all trading higher this morning. Well, what you also want to keep in mind is that all those index changes will impact stocks in today's day of trade. Top of the list is going to be LTI, Mindtree and TVs that comes out of the list in terms of the Nifty 50, and you've got a few additions. So I'll start by highlighting the first one, that is BEL and Trent. Kush, you want to come on BEL and Trent?
Slightly divergent moves on both of them. We know what has happened with the entire defense space, but BEL has not really borne a bulk of that brunt. It's just consolidating within that 20-day and the 50-day moving average band. So I think if you're looking for, let's say, medium-term kind of a perspective, this is a good time to perhaps get into BEL. You could be looking at the all-time highs of 340, perhaps retesting. Trent, on the other hand, has had a stellar run. Just technically speaking, this is actually a buy on dips, because the upside, as far as buying at current level goes, isn't really as great, at least in terms of the risk reward ratio. So if you get it close to 6,500, 6,600 kind of levels, that's perhaps a good entry point. So both of them at the moment look like they're on the firm footing for different reasons, but BEL can be accumulated at the current juncture. Trent, a buy on dips.
Sony, what are you doing with Reliance Industries? They've got that AGM on Thursday. Would you consider going long on RIL for the next 2 to 3 days on the charts? How does this one look?
I think RIL is, it's crucial for RIL to just sort of, sustain above the 30-20 levels. On Friday, it did test, it crossed those levels. It did not sustain above it. I think it's consolidating somewhere between 29.80 to 30.20, 30.25 odd levels. It needs to break above or below this range for any further upside or downside we can see. So I think just wait until the level of 30.25 crosses. Maybe above that, we can see a good, decent upside towards 30.60, 30.65 on intraday basis. And if it's able to even sustain above those levels, then a positional play becomes quite strong. We can see it heading towards 3,200 once more, but that becomes a very positional. So I think it's wise to accumulate at these levels if one is playing for a medium to long-term play, and it's strong. It has a good support base of around 2,900. So I think that's the level is fine to accumulate for a long-term play. For intraday, just wait out for the levels to cross if somebody has just to play for intraday.
Some movers on the broader markets pre-open that we should highlight. KAC International, one of them, over 1,000 crore rupees in orders for this RPG group company. The stock up 6% in pre-open. Alembic Pharma is the other one, and we highlighted it in our stocks to watch list as well. They have got US FDA approval for some scalp treatment foam product. REC doing fairly well. Remember, there has been some recoveries for some of these players because of the Lanco deal and Adani Power buying that Lanco deal. So there's some recoveries there, and REC IDFC will also benefit from them. Karur Vyasya in news. SBI Mutual Fund has got permission to increase stake to about 10%. On the downside, Zydus Life looking negative, 3.5% down. So is Suvain Pharma and KFin Tech this morning. But let me go across to Harsh, who has the top brokerage pick of the day. Yes, Harsh?
Well, it's a slew of management meets, Tamanna, so it's been hard to pick, but Coal India is the one that I've picked up for the day. Just in terms of volumes, management has guided for a volume number this year of around 838 metric tons. In terms of where we are currently, we're growing at roughly 4% year to date, financial year to date. For the rest of the year, Coal India will essentially have to grow at 15% for each of the months for the rest of the year. to clock that growth guidance number. Looks difficult to meet according to Nuvama. The second one, and I think the most important, is with regard to the cess, on the mineral tax retrospective. In terms of the impact of that, around 7 to 8,000 crore is the quantified impact basis management commentary. How is this coming through? Around 32 to 33,000 crore is going to be the impact itself of the tax. But because a lot of the volumes that Coal India has done is through FSA, which is therefore hedging themselves against this cess. So around 24 to 25,000 crore likely will get recovered, which is a positive to a certain extent. And therefore that impact may just be limited, which is a possible positive, at least the way things have played out this weekend. Last off, with regard to EBITDA and capex, well, capex continues to remain robust, around 15 to 20,000 crore in terms per annum over the next 4 to 5 years is what the management has guided for, and around 40% of that will be on new initiatives, especially on non-coal new initiatives, and that will obviously spur growth. Just in terms of IRR, around a 12% IRR is what they expect on this fresh investment or capex that they are making, and therefore that may give some visibility for the future. For the moment, Nuvama expects upside to be capped. In fact, they are suggesting a neutral stance, and they're suggesting a sell on any increase in terms of price, any price action, any price increase likely. Nuvama suggesting a sell rather than a buy.
A sell on Coal India rather than a buy. That's the word coming in. A couple of other stocks that will be in focus. I'm not sure why the market doesn't seem too pleased with Zydus' 50% buy of Sterling Biotech from Perfect Day. Maybe the price is a problem in that sense, and Zydus on back of which is down about 4%. Market's not seeing what the management is seeing for now. Alembic Pharma, PTC Industries, Zen Technologies on completion of that QIP, TCI on back of that buyback will be some of the movers in today's trade. BHEL, JSW, Macrotech, NHPC, Union Bank are all going to be added to the Nifty Next 50, so could be some amount of trading opportunity on those counters as well. Well, Chakri, Interarc list today on the exchanges. Expectation is of a 30 to 40% premium. For investors, have you looked at this primary market offering? And also for investors who missed the bus in terms of getting an allocation to Interarc, would you recommend they buy it if it comes in at a 30% premium today?
You know, given the amount of oversubscription that we've seen on the stock, and once it probably and building materials as a space will kind of benefit whenever these interest rate cuts start happening. That's a macro issue. Its valuation is slightly lower than that of its peers, so that's a positive. But that advantage is likely to be at the open once it opens about 40% higher. So it's on par with any. So therefore, if it's open up 40% higher, then there's not much room left to buy.
Kush, let's talk about some of, and now, you know, you have pre-open session which has closed, and some of the big movers over there. Let's pick KEC and Alembic come top of mind. Even Tanla has spiked up in the last bit of the pre-open session as well. Anything over here that you see sustaining movement through the day on the charts?
There's a possibility that KEC might, it's already had a strong base around that 815 odd levels. It was, I think, perhaps looking for that trigger, and this news will perhaps give it, that much needed push. While the gap up opening is quite big, and you may not be, too keen to perhaps go out and buy. I think it's perhaps a good time to accumulate if any kind of dip does come about, because the levels on the upside are 920, and then once that is taken out, you're looking at a 970 as well. So this is coming out of a long consolidation. There's been a round of profit booking. The base is in place. I think the trigger's already there. The stock could perhaps gain further momentum. Maybe not today after the kind of up move that we're seeing, but over the next couple of days.
Well, KEC has won an order to the tune of 1,079 crores. So is Ashok Bilkon. They won a significant order too. Let's see the stock is reacting to that news flow. 5% high on Ashok Bilkon. Sony, you want to come in on an intraday pick? You did tell me that RIL was more of a medium-term trading opportunity. But if someone's looking to buy something this morning or even sell something this morning, what should it be?
I think again, IT would be the pack to focus, and LTTS is another stock that seems, it's continuing with its good uptrend. 5400 is a very strong support. One can continue to hold the stock. If it's able to cross the 5540 level on intraday mark, you can see it heading towards 5680, 5600, keeping a stop loss of 5450. I think that's very important to watch out for. It becomes a conditional buy above 5540. One can buy for intraday basis for targets of 5600.
All right. Okay, so, we are looking at positive kind of a start this morning with IT definitely in focus. Some other sectors which might see some interest is defense as well. Just look at what a Garden Reach is doing this morning. We talked about BEL, some of the other names. Let's see what a Cochin Shipyard is doing. So that's one spot where you could see a turnaround after being completely isolated for some time. Chakri, would you dip your toe in the defense pool? Because many have burnt fingers and toes.
Yeah, if you have to dip, then I think it would be Bharat Electronics. One, of course, it has the Nifty inclusion. Second, the company is given a diverse range of products, etc. And its valuations are still not as demanding because its outlook over the next 3-4 years, revenue is very clear. And therefore, Bharat Electronics amongst the lot.
Okay, so defense maybe be very, very careful, and a Bharat Electronic might be one call over there. Soni, would you agree? Or is there anything that you'd pick in defense?
No, I think I would agree with BEL. I think it's looking quite strong, with a good breakout above 300. The stock can test. For short term, one can see towards heading at 315, 318 odd levels. Maybe we can also keep an eye on Hindustan Aeronautics. The stock had given a good breakout. It closed above the 20 EMA hurdle. I think that's very important to watch. It also witnessed good long filter positions last Friday. The stock can head towards 4900, 4940. That's also a good short-term trading play. One can keep a stop loss of 4770 from current levels.
Quick call, Kush, before we hit the opening rates.
HFCL, it's hit that 150 mark, very close to that. I think it could gain further momentum from here on. 155, 160 levels to look for as targets, 145 stop loss.
Right, so HFCL, Birlasoft, LTTS are some of the short-term trading opportunities given out by Sony and Kush both. It does seem like it's going to be a good start for D Street. Remember, we're only 1% or even lesser than that away from our record highs. The trade will belong to global-facing companies, so counters such as tech and metals may be leading from the front. Consumption, good chance, may see some profit taking after, of course, gaining in terms of Friday's trade. And Bank Nifty continues to oscillate between gains and losses, so it's going to be tough to call this one out for now. But it'll be exciting to see how the breadth plays out, because the broader markets have largely been the star of trade over the last few days. Well, that's the market. It's good going. We've held on. Open at 24,900, so we're oscillating around those levels as we see it. There is no runaway rally, and this is not coming as a surprise. The last 7 days have been very strong for the Nifty. And when I say strong, even though the gains have been gradual, the whole market momentum, the breadth, the VIX, the PCR have all favored the bull. So it's been slow and steady, but it's been a good move. And this morning, we're struggling to hold on to levels of 24,900, but I don't think anyone's complaining just yet about that. The breadth of the market's not too bad, and the broader markets are outperforming. Bank Nifty, I called this out this morning saying that Bank Nifty, in my opinion, could be a buy on dip strategy, largely because all of August it's oscillated between gains and losses. This morning 0.3% higher, as we would like to see that. Mid and small cap index also seeing some outperformance as compared to the benchmark. On the Nifty 50, I'm assuming the top gainers would come in from the oil and gas pack. As we see, ONGC up 2%. There's been more than one reason on that. Of course, local news flow and the fact that crude is trading higher are two reasons why ONGC trades firm. The breadth of the market is not great, not the way you would be very comfortable with. There is a 50-50 split. Still, the bias is on the upside, but this may not last too long from the way it's looking. Tech Mahindra, TCS and Wipro, Hindalco, those are the top 5 gainers. So metals, tech are leading the way up. Banks not doing too badly. On the sell side, Apollo Hospital, I think this was a buy call this morning, but the stock is seeing some pressure as we see it, 2.5% lower. Dr. Reddy's is the other one on back of its observations, is seeing some weakness. ITC seeing profit taking, but like we thought, defensives not looking good. Tamanna, no surprises, consumption has a good run, had a good run last week, so profit taking here. The breadth is not very strong, but tech is keeping it together for now. But I honestly won't be surprised if we actually see some profit taking very shortly from now on.
Yeah, we'll wait and see, Samina. But tech, you're right, is the story this morning. And TCS, despite their North American head quitting, has seen no issues at all. Even in the broader end of the scene, tech stocks are buzzing. So that's one big story. Let's just look at how the broader markets are doing this morning, mid-cap and small-cap index. And they're open actually less exciting than what we've seen on the Nifty, to be honest. Pretty much flat on both those, and small cap 250 at least about 0.5% up. So that's really the theme there. It's going to be stock specific. And speaking of stock specific, let's look at what KEC International is doing after completely buzzing in the pre-open session. Does it still continue that momentum? Remember, they have new orders of about 1,079 crores. The stock up 5% this morning. Let's look at Alembic Pharma. They have a US FDA approval for an ANDA. Stock about 4% up. That's been positive. BEL and Trent will soon enter the elite Nifty 50 club. Not too much action there, but then the stocks are positive. They replaced Divi's and LTI Mindtree. What's happening there? Let's take a quick look. LTI Mindtree, of course, though might be positive for different reasons today, but those are all also in the green. On the sell side, Zydus has acquired 50% of Sterling Biotech, but has not seen a thumbs up from investors on this news. So about 5.5% down on that. And one more positive news flow for Ashok Buildcon. They have emerged as the lowest bidder for an order of about close to 500 crores, 478 crores to be precise, from MMRDA. So these are some of the stocks and news which are buzzing, but broadly as a theme, oil and gas pack is seeing some action, and IT is the flavor this morning, isn't it?
But some interesting plays. Gujarat State Petronet, GSPL, is up 8%. That's the biggest mover on the Nifty 500. Honasa Consumer, I don't really know what's going on here, but the stock is seeing an up move and a sharp one on good volumes, up 6.5%. Kaplan Point Laboratories has been one of your top gainers on the Nifty 500 last week. So it's been sporadically gaining, but gaining really well. And this morning is no different, 5.5% being added to that. Tamanna mentioned the order win on KEC, that's your big winner. You've also got Angel One, that's up 3.5%. Sony's top pick this morning was Birlasoft, and Birlasoft is seeing an uptick of 3.5%. I'll get an update from you on that in a minute, Sony. Apart from that, you've got Coforge, Hindustan Copper, so broader metal names also gaining on back of dollar weakness and an expected rate cut. I'm not sure why the market is so disappointed with Zydus on back of that 50% stake buy in Sterling Biotech, but the stock is down 5% as we see it. Healthcare generally is having a quiet day in trade, so it's not just a Zydus, but you've also got with that MediPlus Health Services, you've got Apollo Hospitals, Max Healthcare, all seeing some profits being taken off the table this morning. Well, Sony, very quickly, Birlasoft was your pick this morning. A quick update on that, because I'm assuming if traders were watching you this morning, they wouldn't have had the opportunity to buy just yet. Still a buy at these levels. If I can recap for you what those levels are on the stock, but it currently trades at 620.15. Would you still recommend a buy call? And if yes, 630, the target still holds?
Definitely. I think although it's up by 3%, the stock has just confirmed that, the option chain breakout above 605 was holding quite strongly. In fact, on intraday basis, it is crossing 20 EMA now, which is a good indicator for a short-term trade. So I think hold for the higher targets of 630. Even if somebody would have bought just at opening around 613, odd levels, you're still gaining around 1%. One can continue to, maybe a book partial profits, trail stop loss to cost, but certainly the stock can head towards 630. IT, as clearly mentioned, is the momentum. It has the flavor today morning. I think all these stocks will continue in IT stock. IT space for the day. One can continue to hold. 630 is a target it can get achieved.
On Birlasoft, Reliance, Anil Ambani Group companies under pressure again this morning. Reliance Power, Reliance Infra, and Reliance Housing are all seeing big cuts in trade once again, as we see it. Kush, you want to come in with a quick update? If you've identified anything new, the breadth has improved. No, the breadth hasn't improved just yet. But any updates on your calls before market and after market open?
Sure. Let's start with Apollo Hospitals. I'm not glad that the stop loss taken out, but I'm glad that it was taken out right at the open, which means, if anyone's...
so maybe no one got a chance to execute the trade, fortunately.
Into it, absolutely. On the other hand, you're looking at a Shriram Pistons.
But one second, sure. If the execution didn't take place, do you recommend buying it 2%, 3% lower right now?
No, I don't, because once the stop loss is hit, I think the call is done and dusted. Okay. Plus, as we were discussing, or as you rightly mentioned, that, the healthcare space is seeing a bit of a profit taking. This could well be because some of the other sectors like metals and IT today have come in flavor. So, there could be some sector rotation that is happening. So, Apollo Hospitals, stop loss hit. Let's just, move on. There are a couple of other ideas that you can always get into. Shriram Pistons is one of them. 2200, 2300 were the targets. The stock's actually given plenty of time to get into, after opening as well. 2100, 2120 thereabouts where the stock was hovering. HFCL is the other stock we discussed. And just to add to the names of, stocks to buy, Radico Khaitan, it's been seeing a lot of traction over the last couple of sessions. Today also up about 2%. I think this is also one stock that you can look at.
Okay. So those are the stocks that you should keep on your list for the rest of the trading day. Thank you so much, Kush, Soni and Chakri for joining us today. But we have now Vikas Khemani with us, founder at Carnelian Asset Management and Advisors, coming in on all of the big events that have happened over the weekend and how he sees trade pan out. Vikas, always a pleasure to speak with you. I just want to understand your view on how much of a factor is a September Fed rate cut going to be for the Indian markets and for Indian investors? I mean, you're seeing that pop in IT stocks today, but is there any significant and long-term impact for us?
I think clear implication would be definitely from a flows perspective. As you know that whenever interest rates are hiked in US or Fed raises the interest rates, most investors pull out money from emerging markets, and that's the reason we've been seeing outflows from emerging markets, including India, in last 2-3 years. And I think it, in that sense, marks the reversal of that trend, and I think probably we will start seeing a positive flows towards India with that cut. Of course, it might take time, it might happen, but the trend will reverse. And of course, secondly, also with the interest rates coming down, bit of a spending might come up on the IT side. And I mean, we've always said that IT is the best trade on the interest rates coming down in US. So that should play out. And as a result of that, I think IT has been in a strong offering for quite the last 1 quarter or so, as the rate cut expectations started getting built in. So as it happens, it will only, I think, do well.
Vikas, would you actually recommend or see a reason to buy in on IT right now, considering if all of this pans out over the next month, you have maybe, headwinds coming in for the space? Do you think you would be constructive on IT in a more specific manner?
We've been constructive on IT for quite some time. It's not new. So, I mean, we don't take call based on a particular event and reacting. We were expecting this for quite some time. We have been saying that IT is the best trade on interest rates coming down in US, and our hypothesis was that in US Fed will start cutting rates sooner than later, and we've been holding this view for 6. We don't try to time or react based on the particular event coming out. But yes, our view on IT continues to remain positive. It was positive, it continues to remain positive.
So of course, getting beyond the Fed-led rally and anticipation about this much talked about rate cut, are you currently concerned about frothy valuations? Because these are times when we're seeing a spike in valuations across sectors, across market caps. There are stocks and sectors on the opposite end of the spectrum, such as maybe EV and traditional autos, or quick commerce and retail players. Both ends of the spectrum are doing extremely well, but there'll only be one winner, which makes me think that this market is frothy and there is a lack of discipline in investing. Is this something you're concerned about, Vikas?
These are very kind of sweeping statement that lack of discipline in the investing. In my opinion, in every bull market there are excesses. In every all kind of market there are excesses, and there are different kind of hypotheses being made. I have been maintaining for quite some time that we don't find Indian markets expensive. They are not cheap, but they are not expensive. They are in a fair value zone. The kind of the growth which India is witnessing, in my opinion, anybody who says India is expensive is doing disservice to the investors who are willing to take because this kind of narratives hold investors from investing. Having said that, I am not making a comment saying that a particular company there are no pockets of excesses. The moment we make a statement that markets are frothy and expensive, people get scared. But at the same time, I can tell you we are fully invested. We find investable opportunity at this point in time in the market. But yes, you got to investing is not about.
If you don't think they are too expensive, and if valuations are not frothy, then where is the opportunity? Why don't you tell our viewers if they've got incremental capital to allocate, where should that incremental money be going into?
It should be going into entire India story. It is manufacturing.
Because, right. So manufacturing being one sector, what else do you like right now, Vikas?
You got to tell me that. I mean, let me complete my statement. So there are opportunities in manufacturing, there are opportunities in financial, there are opportunities in consumption, there are opportunities in services, including IT services, there are opportunities in infrastructure space. Each of them have opportunity and each of them have excesses. It is job of an investor or people like us to identify where risk reward lies in investing. India is happening in a very big way across all these 5 buckets. There are many, many opportunities which are there. And so hence, and I like I said, we are fully invested. So if there was frothy valuation, we wouldn't be fully invested. The portfolio characteristics of some of our holding is 24-25% earning growth, 19% ROE, 0.1% debt to equity ratio, 0.9 times price to PEG ratio. So if you are able to construct a portfolio like this in a market like this, it clearly says that there are opportunities. And very often what happens is we miss from a very long-term perspective. I've been hearing this market valuation expensive narrative for last 8 months, 9 months specifically, and the market continues to do well. So in my opinion, looking at 1 or 2 or 3 particular sector stocks or excesses, we should not talk about overall markets being frothy.
Each to its own, I guess. But let's not forget.
Absolutely.
Thank you, Vikas. Markets have done double-digit returns over the last 5 years, barring 2022. In fact, I'm sure Deepak will have a little more realistic view on this one. Tamanna, you want to start with Deepak?
Yeah.
Actually, can I just start with Deepak and then you
Sure.
go to Fed? Deepak, I was talking to Vikas Khemani just before you joined us, and my question to him, and the same question to you, because it's good to get some realistic perspective on the markets as well, is that markets, most people believe, is frothy in the current sense of the way we see it. There's a widespread spike in valuations across sectors, across market caps. I mean, look at EVs, look at autos, traditional autos. Both sectors or both ends of the spectrum have done exceptionally well. Be it quick commerce, be it retail. Again, 2 opposite ends of the spectrum where you'll only have one winner, right? But both spaces of the markets are seeing buying and everyone's gaining. Are you concerned about valuations in this market? Before we go into the Fed-led rally, I want to understand from you any worries on valuations for the Indian markets, or foreigners are just not being as wise as us?
Yeah, I mean, I don't know the exact answer to that question about the foreigners part, but I'll tell you this from my experience, it's always that there are pockets of undervaluation and pockets of overvaluation, right? So you've got a bunch of stocks overvalued probably 5 years ago, including the likes of maybe 4 years ago, likes of HDFC Bank or the likes of a lot of the foreign-owned FMCG companies, where you gave 80 times and 100 times earnings for these companies, and come 3 years later they are at roughly the same prices or below, and earnings have gone up, but the stocks haven't done much. Meanwhile, another set of stocks which were probably undervalued at that time, maybe it was PSU, defense, manufacturing. A bunch of these companies have been undervalued for over a decade, and suddenly, because of certain structural changes and also because of investor interest, the stocks have gone up quite considerably, and now the fear is that compared to their past, they are undervalued. To give you one example, and we own some of these stocks, there's let's say a Mazgaon dock which has been told that it's terribly overvalued because it's gone up 6x in the last year. But it's also true that their earnings have increased and they're trading at maybe 35 to 37 times earnings, whereas a bunch of other companies like Hindustan Unilever or some of these other companies where the earnings haven't grown meaningfully even in the last decade, they're trading at 80 times earnings. So there is a feeling that if you ask somebody, they will tell you Hindustan Unilever is undervalued because it hasn't moved in the last 2-3 years, but Mazgaon dock is overvalued. So the valuation picture, I think we have a very high recency bias to price, but not a very strong hold on earnings or growth, which is why we tend to call something overvalued just because it's moved up in the recent past. But I would say that there are, even today, a lot of opportunities. Some manufacturing companies in India are probably, even though they have high PEs, the scale of growth is so large that they will be able to grow into their valuations relatively fast, and they've demonstrated it also over the last year or so. Prices are going to be high for some stocks, are going to be lower for the others. That's just us, I think, that have to look at it. And to be honest, just looking at it from the outside gives me a lot of satisfaction to hear that most investors are worried that the market is frothy. Because what you don't want is when most investors don't think that the market is frothy and they're still investing like crazy, and that is really when the bubbles burst. But when everybody is worried, it's usually a good time to invest.
Hi Deepak, good morning. Tamanna here. So if everyone is worried, it's a good time to invest. Right now, nobody seems to be worried. People are laughing off the valuations question. Is the reverse then true? But on a more serious note, let's talk a bit specifically about some of those sectors that you mentioned, and I want to come to the financials, to the banks, because those right now are not really in favor and could see the next cycle of up move. If yes, what are you liking in this space?
So typically there are some indications that, for instance, interest rates will come down because the US may reduce interest rates at some point, and then India will likely follow. That should provide some kind of relief to banks, but they have to cut down their NIMs. In that sense, that the net interest margins being nearly 4% will not sustain over the longer term, because you have competition now in the form of NBFCs, people who are being able to give a quicker loans, and the other banks as well. Even the PSU banks have started to fight back. So a large number of the private sector banks will probably have to reduce their NIMs. Their NIMs are at tremendously high values. And also that is the only thing that you can use for growth. So I don't really care if your NIMs come down, but if you're able to grow 25% with a slightly smaller NIM, then so be it, because if you're going to grow at 0% with the same NIM, then it is of no interest to me. I think that is the philosophy looking forward, but to be fair, there will be a time for this adjustment to happen, and till then we're still into the larger banks, private sector banks. I probably missed the whole public sector bank rally, to be honest, because we were focusing on the larger private sector banks. But
you will continue. Do an HDFC, Axis, ICICI still feature on that list?
Yeah, I think we've been positive on some of them. I own some of these guys, but I did own a few public sector banks, but then it got out much earlier because we wanted to shift to private sector banks. But unfortunately, the public sector banks have done much better since then. So,
quick question, Deepak: how do you feel about the oil and gas pack right now?
The All India, sorry?
Oil and gas sector.
Oil and gas, okay. Sorry, oil and gas. Yeah, oil and gas is a bit of it's been a very strange time. You had, all these wars and all that, and you're still seeing stable overall oil prices. We're positive on some of the public sector oil marketing companies, simply because I think they're long-term cash flow generators. But in general, the oil and gas sector is challenging because it's so cyclical in nature, and also because the cyclicality of it hasn't actually meaningfully altered, the perceptions or revenues in the recent past. That means usually something is cyclical and it actually doesn't behave like it's in a cycle. That means some big moves are probably coming ahead. At some point, you're going to see a dip in transportation requirements of fuel. Recently in Germany, or I think in Germany it was, that you saw that renewables had flooded the energy market so much that power prices went negative for a while. Of course, the result of summer and solar being active and all that stuff. But increasingly, perhaps as we grow, transportation itself may move towards less usage of crude oil, and this is going to cause a dip in the market in terms of demand. So because it's so unnaturally well supplied and demanded at the same time, I think prices of crude oil will decrease, which means margins of companies in that part of the space, whether it's exploration or in the exploration space, will probably decrease. But I think marketing in India will continue, because I think we're going to see either hybrids or petrol or diesel-based cars for a long time from now.
Deepak, I'm going to have a public request, because Tamanna and you were just discussing that we need to have you on a half-an-hour sit-down conversation with us, and that should be before 11 a.m. So hopefully you can find time.
We've cornered you.
Yeah, we've cornered you publicly. So we'll hopefully connect back with you. But thank you very much for joining us this Monday morning. Always good to get perspective from you.
Thank you so much.
Thank you. Bye. Have a good week. Well, one stock that celebrates its 25th anniversary and does a bonus issue, and investors of this company are probably very excited about the future of Power Mech. S. Kodanda Ramaiah, Director of Business Development at Power Mech Projects, joins in. Sir, good morning. Thank you very much for joining us, and thank you for waiting by patiently while we were coming to you. First up, congratulations. You've completed 25 years and rewarded your shareholders with a bonus issue. This comes as a very pleasant surprise and also reiterates the faith that you have in the company going ahead.
Yeah, thank you, madam. Thank you for wishes. We are on a 25th celebrations, 25th year celebration. I think we are doing pretty well for the last 9 years since its IPO has gone on 2015, and the growth story remains. I think we are bullish about our market and also our service to the customers and our stakeholders. And the company has got quite a bright future in terms of order booking, in terms of opportunities, in terms of diversified business approach. That is what I would like to say. Based on the revenue growth, we have seen about 17% growth from 22 to 23 to 23-24. And another 23% growth expected in the current year from 4,234 to 5,200 crores. And we have got 5 sets of businesses. One is the installation business on the mechanical and equipment services. And we are basically a service provider, and we provide services in the civil segment also, both in the power sector and the non-power sector. And we cover a wide customer base. And the very important segment of our business, which sustains the business and also contributes to the top 10, is the operation maintenance. We are a leading player in the operation maintenance in the country for the power sector and also in some of the non-power sector business also. And there is an electrical group which we have established a couple of years back, and we are looking at the business there also. But what is more important, exciting, is the mine development operation we have taken up in the last 2-3 years. And 2 mines with a total capacity of 9 million tons are under development in Jharkhand. And that should give a lot of headway in the future, both for the top line and the bottom line. And as for the order backlog is concerned, there has been a steady growth in order backlog. From the 2022 end, we had 8,855 crores. And in 2023, it went up to 13,733 crores. And the last year, end of April, it is 17,362 crores with a growth of 26% and earlier 55%. I think this is mainly due to the continued focus on the customer base, then market penetration and diversification, and also looking at the opportunities available. available.
Right. So I want to talk about very specific verticals because I know a lot of brokerages are very constructive on the mining development and operation piece of your business. Please share with me what is the top line that you're guiding for from here, what are the margins, and in the next 2 to 3 years, where do you see this vertical contribute to your top line? And also at peak capacity, what margins will look like? And where they are and where do you see them go over the next 2 to 3 years?
Yeah, the two mining projects, at Kotre Basantpur and then Tasra in Jharkhand, that development is in full progress. And one is a thermal coal to be supplied for the central coal fields, that is about 5 million tons, and that is Kotre Basantpur. Another is the coking coal to be supplied to Steel Authority of India Limited for the Bokaro Steel Plant, that is about 4 million tons. Now, there are value additions in both these projects. Of course, better value addition is there in the Tasra project because of the coking coal we have to supply, with a coal washery also to be installed in that. And that we have taken, the development work is there in various clearances, statutory clearances, and the project clearances are in progress. We expect it should come on, already some mining activities have started because of OCP mine, open cast project mine, in these projects. And last year we had a modest turnover of 41 crores with about 350,000 tons of mining operation. And this year we expect to increase it to nearly 1 million tons. And that is parallelly going the development work as well as the mining work. And our aim is to see that the potential for this, both the mining is for the Tasra project, the potential is around nearly 1,300 crores when the peak capacity is reached for about 4 million tons. In that, about 3.5 million tons will be the coking coal. And the other Kotre Basantpur, the thermal coal is about 5 million tons. That will also, once it reaches peak capacity, it's about 400 plus crores. And these things are benchmarked with the coal index to be provided. And therefore, the margins are much better. And then, the long-term view is that, both these projects will run for 25 to 20 years. In that way, it will give sustained growth to the company, both to the top line and the bottom line. And we expect it will contribute more than 25% of our business in the coming years.
Sir, any risk on these two projects? I know they're long tenure, 20 to 25 years, and if they're contributing 20% to your book, there's also some risk it then carries, right? Anything that you may be watching out for closely, because if these two deals go wrong, it could mean significant damage to your top line, sir.
I don't think so, because let us understand coking coal. How coking coal is linked is with the demand for the steel. And the steel capacity has to be enhanced to double from present 161 million tons to almost to 300 million tons. And a lot of steel plants are going for expansion, and we have got a binding agreement with Steel Authority of India Limited with an offtake price of 3,555 once the coking coal system also comes into the line. And the other thermal coal is about 871 rupees for the central coal fields. Therefore, they are all binding agreements, and then the demand is there. Thermal coal is also required for the meeting the requirements of the coal generation, which is continues to be there. And then coking coal also. In fact, India is importing a lot of coking coal. Therefore, I don't think there are any risk in these projects. And more than that, we have got in-house project capability experience. And many of the aspects we are taking care of, the project deliverables are going on in terms of various project clearances. Environmental clearance is in the process. We expect by September we'll get the full environmental clearance. Afterwards, we can take the full action for the development, placing of the orders, and then undertaking the construction works.
Now in third quarter, I think all eyes will be on the MDO piece of the business turning revenue accretive. Third quarter of FY25, is that the fair timeline for MDO business to pick up?
No, we already, as I told you, 41 crores is the revenue we have generated in the previous year. This year, we expect to generate about 200 crores. And
you say 400 year, or did you say 200?
200
okay,
crores.
Okay.
And the coming year, next year, perhaps it will go up to nearly 400 crores. Once the project is fully operational, maybe 2 to 3 years, it depends on the clearances and the way it is executed. Right. Then there is a full potential of reaching in both these projects something like 1,600 to 1,700 crores. That is the full essential, and offtake is also required.
That's
Therefore, that is a very, we are bullish on that. A lot of focus is on there,
right, sir.
and we have tied up the investments required, and we are quite hopeful this project will take shape as per the schedule.
Right. Congratulations on your 25th year again, and good luck. Hopefully these plans play out as expected by you. Well, it's Power Mech. The stock has been on a breakout over the last few days. They've approved a bonus issue to existing shareholders as they celebrate their 25th anniversary. It's another 4% higher in trade as we see it at the day's high point. An MDO, which Tamanna contributed 40 crores to the top line in this quarter, is going to go up all the way to 200 over the next 3 months, 3 quarters, and 400 in the following year. So lots of potential, and I think Nirmal Bang is one that's betting big on this one.
Yeah, okay. So that was an interesting conversation with Power Mech, but let's turn our attention to Info Edge. Chintan Thakkar, Director and Chief Financial Officer at Info Edge, now with us, and a good time to talk about the outlook for the next quarter. I mean, obviously the Q1 numbers were there some time ago, and Mr. Thakkar, very good morning. The quarter one was a good set of numbers, perhaps margins a little lower than what was expected due to marketing costs, etc., as you explained in your con call. But I want to start by asking you about Info Edge's investments in Zomato. It's a company which has had a great track record for smart investments apart from the core businesses, of course, Naukri, Shaadi.com, Jeevansathi.com, etc. But tell me about your outlook on the investments in Zomato. What are those now valued at with the kind of up move that company has been seeing?
Look, valuation is something you guys might understand much better than what we understand.
I doubt it, sir. You are the CFO. You know where it's going and what Zomato is doing for you.
We do investment where we think that there is a potential to create a real large business. We have been the founding investor in both these companies, Zomato as well as Policybazaar, and there are many other investments that we have in the pipeline. And we have been the largest shareholders even as on this date. Right? So we do see a great value in terms of what the business that's being created. And it has been a very long-term investment, and we still think that there is a lot more headroom for them to grow in terms of the real business, in terms of the revenue growth, in terms of profitability. They are still on their way, over there. So we do have a very long-term outlook, for the investment. We have seen their journey right from day one, right? So we have seen their capability, their execution, their vision. So we are pretty confident about, both the, investments. Having said that, what we do in terms of, the holding that we have, obviously it's a board call, and board keeps reviewing it on a quarter-to-quarter basis. But the way the board is thinking as of, this time is that, look, I think there is a lot more room for them to create a real value.
This is even including, say, a Zomato, which has run up, has announced new strategic plans. Was wondering if you had any kind of take on, they're branching out quite aggressively into the going out business, etc., and if there is more room there.
Yeah. So look, we are certainly supporting whatever moves that they have taken, and then we have always been supporting them because, like I said, that we have seen them executing, so well that we are pretty confident that they will come out, with flying colors in the execution of this new so-called app that they are, the new platform which they are making, which is called District. We are very bullish about the same.
Okay, let's turn to, of course, Info Edge, the quarter gone by, and the outlook. I want to start on, say, the kind of green shoots we're seeing in IT hiring and on the job side. What do you see as the build-up on that trend? Is it a consistent trend in what you've seen from Q2 so far?
Yeah. So if you really look at how it went post-COVID, that there was a resurgence in the hiring market, and then from mid FY23, it's kind of started slowing down. FY24 was flattish. But the last quarter of FY24, we started seeing some green shoot in terms of how the recruitment business was growing, particularly on the IT side. It has somewhat stayed in a little bit lower rate, but in Q1 as well. And if you look at the JobSpeak index that we kind of publish on a monthly basis, The July, the jobs peak index suggested that overall recruitment market, is up month over month by 11% and YOY by 12%. So these are all encouraging signs that we have. Of course, a lot of billings happens in the end of around the end of the quarter, last 15 days of the quarter. So we need to see how the September will go. But so far, the trend, and the jobs peak index suggests that we are on track.
The billings which were up last quarter and up about 11 odd % year on year were led by, I think, one significant growth was in Jeevan Sathi plus Shiksha at about 28.6%. So just break that down for us, Mr. Thakkar. Is that because of the base effect, or are you seeing a more spurt in these two verticals?
Yeah. So Shiksha has been kind of steadily growing, and the growth rate in billings for Shiksha was about 25%, but Jeevan Sathi grew by about 35%. And that's part of the new strategy that we had about the freemium model, and that seems to be working out. So it has been, the strategy was adopted about 2 years ago, and we are seeing a kind of a steady growth in the progress that Jeevan Sathi is making in that direction. Initially, there was a hit on the top line, but that was as per the plan because we made certain services premium. Now we are coming out with newer and newer features, which we are able to monetize it. Plus, there is an increase in terms of the overall user profile, which was our real intent behind this new strategy. So that seems to be paying off. The marketing spend has come down because now it's more of word of mouth about this free feature. So we are almost close to break-even type of situation in this business.
So just a little more detail on those two, because these are sort of new verticals or new strategies which seem to be working out. On Jeevan Sathi, you're saying that the premium business is now bearing fruit. How much do you see the growth for Jeevan Sathi? If new billings grew by 35% in Q1, do you see that sustaining? And what are the increased margins coming in from the premium business? And as a percentage of clientele, how many do you see coming into the premium service for Jeevan Sathi?
Yeah, so the premium part, the part that we are giving free, I think is attracting a lot more profiles for us. And that has been happening for past 2 years, is kind of gradually building up. So we are seeing a gradual increase in the top line. Hard for me to really forecast what the growth would be for the quarter or the coming quarter, but given the trend that we have been seeing it, I think it should be a very healthy growth for us. And the overall margin seems to be improving, so the cash losses are reducing, fundamentally because of the lower spend in the marketing spend. So if we continue on this strategy path, we will see a kind of a little bit of at least the break-even is something which we are aiming for.
By when, sir? The break-even that you're aiming for?
Well, I think even this quarter it was almost break-even. It was almost break-even. On the cash basis, it was like -2. So I think it's close to that. But again, every quarter we might have a different call on the marketing. So quarter to quarter, sometimes there could be an up and down. But if you take the full year basis, the real goal is that we kind of go closer to the break-even.
Yeah, in this year. But in Q2 so far, are you seeing those trends continue?
Yeah, like I said, that it's for me too early to kind of really forecast what the Q2 would be.
Okay.
But I think it's a very stable, steady business, right? So it's usually you don't see too much of fluctuations. But let's see.
What about Shiksha? I mean, this is a space which was very, very popular a few years ago and then now has sort of been in the shadows, right? I mean, education online is a tough nut to crack. Why do you think you've been seeing some up move in Shiksha?
Yeah. So first of all, just to clarify, we are into classified business of Shiksha, where students comes and do the research so it's not the content business, which seems to be under this shadow. So our business is a little different, than the content business, and it has been growing very steadily. So if you really see it, it has been a small business, but it has not been burning cash for past few years. And it's been growing very steadily, but of course it's a small business. Right? The only slight hiccup that we faced last year in that business was that there is a section of study abroad, and because of some changes happening in the immigration policies of some of the other countries, that had a little impact on the business. But still, on the overall, the domestic business seems to be doing well. And like I said, the last quarter, we grew by 25%, and it was a profitable business.
Yeah, no, I understand that. I mean, you're helping people look for teachers online. The reason I ask that is because, there is, if people are a little put off with education online, does it have any kind of impact? But you're saying it doesn't. Let's come to the core of the recruitment side. What are the kind of, and we talked briefly about IT, but what are the kind of trends you're seeing in an increase in recruitment with sectors? And do you see that continuing in Q2 as well? Do you think Q2 will see a bigger push on the recruitment side of billings?
Yeah, recruitment is our largest business. That's kind of generates almost all of the profits that we have, and we are seeing an improved trend over there in IT as well as in non-IT. Non-IT has been kind of steady even during FY24 when we were otherwise overall flattish, and that trend continues. Some of the verticals inside when I talk of non-IT. Non-IT is not a very homogeneous sector, but if I kind of break it down further, business, financial services are doing good. Pharma companies seems to be doing well. Insurance companies seems to be doing well. So these are all the brighter spots, and of course we are seeing some green shoots in IT as well. So we are very hopeful that the recruitment trends will hold up and it will continue to grow. It certainly seems that we are at the bottom of that U curve, right? We have probably bottomed out, and hopefully we will start growing from where we are.
Bottom of the U curve on recruitments. That's an important sort of outlook. What about 99 acres? And if you can just give us a sense on how you see 99 acres going forward.
Yeah. So overall, real estate market seems to be still in bullish kind of a trend. So we are seeing good jump in revenue. Last 2 years we have been seeing a growth of around approximately about 25% type of growth. Q1 was 10%, but we have now started growing far more profitability. So the cash losses have come down by almost 54% reduction over there. So there also the objective is that we reach break-even point by the end of the year and continue to grow at double-digit numbers.
Okay. Just one last point from you, Mr. Thakkar, since we're speaking, in the midst of Q2, Q1 is behind us. Give us an outlook of how you see the year panning out and where you think the highlights are going to come from.
Yeah. So when you look at the macro, there seems to be a lot more encouraging news. If you look at what's happening in what the expectations are in terms of the interest rates, that could be an encouraging for both for the real estate sector as well as from the recruitment segment. There seems to be a lot more emphasis on the recruitment side. In general, if you look at the commentary coming from the tech sector about the recruitment, it seems that they all are hinting that they have also bottomed out in terms of their hiring. Their utilization rate seems to be at its peak. So these are all some of the encouraging signs that we have. So I think it's just the beginning of the quarter, but we are very cautiously optimistic, so to say.
All right. Thank you so much, Mr. Thakkar. Cautiously optimistic is the outlook and the word coming in from InfoEdge. They've had a pretty decent Q1. And I think the big takeaway from that interview also being that they think that we are at the bottom of that U-shaped curve on recruitment. That means recruitment looking to pick up not just in IT, but in a lot of segments that interest is coming in. And remember, Naukri is the biggest chunk of revenues coming in for InfoEdge. I thought the comments on the Zomato investment are also quite interesting to see. But let's talk about one key listing this morning on the new kid on the block. InterArc Building Products has listed on the Lal Street there. You're seeing that opening bell. The pre-open, of course, suggested a strong listing. Okay. So 44%, 45% right on the uptick, 1304. The price range for this was 850 to 900 rupees. It was a fresh issue of 200 crore rupees, and as per the management, the fresh issue proceeds will be utilized for system upgrades, capital expenditures, and general corporate purposes. So this was an issue which was subscribed, I think, over 3x. So a good listing there for InterArc Building, about 45% up. All right, let's just take a quick look at what's happening in the markets before we wrap for the morning on India Market Open. Steady, 150 points up on the Nifty, not very far away from reclaiming the 25,000 mark, so keep an eye on that. IT is the big story this morning, which was expected after positive comments on rate cuts from Fed Chair Jerome Powell. We'll take a very short break, but stay tuned. On the other side, we have an important voice coming in on the global worldview.